All right, hello everyone. Today we're going to talk about how should I prepare my day before I start trading and trading on opinions. So it doesn't matter really which product you trade. As you all know, I'm trading mainly the S&P and Nasdaq. Before I start my day, so before the cash open, I go and check mainly the hourly charts, the daily charts, and the daily charts. So I go to the obviously the S&P hourly and daily charts to see where have we closed above a significant or below a level, are we trading within the range, have we touched any significant level, have we retraced from that level, have we closed below or above that level. All this kind of stuff, they're gonna kind of, not gonna shape me an opinion, I'm just gonna try to look things 100% technically to see what the market really wants to do. Again, as I said the other times, it doesn't really matter what you think. It only matters what the market thinks or where the market wants to go. It doesn't matter 0% what you think. So, as I said, I look at the hourly S&P, I look at the daily chart, and then I look all the products that are correlated to the S&P. So I do look at the hourly Nasdaq, I do look at the hourly Dow futures, and their corresponding daily charts. So I will look, obviously, the same applies for all the other contracts as well. So I'm going to look at if another contract has reached into a level, has broken into a level, as I said, for the S&P. Now, obviously, these products are a little bit rate intensive, so I do always look where the 10-year futures is trading. As you all know, because of QE, if we have higher rates, okay, this is the price, it's inversely related to the yield. So let's say if the price is down, I'm gonna, I'm not gonna be looking for the downside S&P, just I'm gonna have my eyes open if we start going down because of higher yields. Another thing that I'm looking at, obviously, it's the euro dollar. As you all know, higher dollar, it creates the mood for a risk-off sentiment. So it kind of not indicates that the market is going to go down. It's not a good thing for the equity markets if the dollar starts bidding aggressively against the euro or any other currency. Next, I do open CNBC, and obviously I'm going to look where Europe is trading. And if you're trading Europe, obviously you're going to, before you start trading, so let's say you're trading DAX, you're going to go into the Asia session to see what is Nikkei doing, what the Chinese stocks are doing, and so on and so on. Next, I do look at oil. We don't like higher oil because higher oil, it's higher rates, and we all said what happens with that. And I do look at gold, just a brief look at gold. It doesn't really move that much. It's just, if gold is going up, it's not that good. It means something is going on. And then I do look at crypto. There is a slight correlation lately when, let's say, crypto markets are plummeting. They do affect, in a way, in a small way, I would say, the equity markets as well. Because of profit margin, of margin calls. If someone gets a margin call from a crypto space, he might want to liquidate S&P or Nasdaq or whatever it is. Yeah. What else do I do? Obviously, I do look at DAX and what the European markets are doing. And then what do I do is that I'm trying to find my own levels. I do create my own levels. It's something I'm going to talk on another webinar, not on this one. I do try to spot levels, what levels I'm interested at, even if it's Fibos, if it's trend lines, horizontal levels, have we closed above, below, and as I said before, 10 minutes ago. I do look, obviously, I try, this is something very important. I do try to read the news, so I do read the market news cap, either from Live News or from Livestock News or from Ranstock, or even if you go on CNBC, it doesn't really matter. And I try not to get an opinion from the news because, as you know, everybody's trying to make money in this world. Even the news outlets are trying to exaggerate on things and, And that being said, I'm gonna start, and this is the most important topic on this discussion: opinion trading. As I said, I do like to look things technically. The prices do not lie. What lies, your head is gonna lie to you, so you might lie into your own self. What do I mean by that? I'm gonna show you the daily chart on the S&P. Let me remove the Fibo. So obviously this was because of the Ukraine conflict. I think that's when Russia started invading Ukraine. And the overnight session, the S&P, along with the European markets and the Asian session, it was almost down, I think, 5%. And you start reading the news, and it was like the Third World War. If you go in too much into news, you start creating an opinion. That's how the human brain operates. When you're starting clicking on images on people getting killed and the bombings and everything and whatever, you start creating, oh, Jesus, this is the end of the world. And most of us, we start creating an opinion of how we're going to start trading during the day. So obviously, when you hear the word war, or when you hear the word inflation, you kind of panic and you want to sell, and you start creating opinions on the sell side. So you're saying, okay, I'm definitely going to sell in the open, or if it goes into that level, I'm going to sell, or if it breaks that level, I'm selling, and you start creating a sell side momentum into your brain, which is not good. The market makers know that. Everybody knows that. It could be buy the rumor, sell the fact. Who knows? Who knows? And you kind of have already created a plan for your trading, and the plan is you're going to trade on your opinion, which is not really a plan. If you start trading an opinion, it's one of the most destructive things that could happen. It has happened to me a million times again. I can't really remember of any. I do remember of specific examples, but it doesn't really matter because it goes way back and I cannot really show you the date, technically what happened. So I'm telling you with confidence that every time I'm hearing, oh, Paris, do you know what happened yesterday? Or, they bombed Israel, or they bombed this. And I'm like, and I watch the market, and let's say the market is trading within its previous daily range. And although in a normal day, I would come in and say, okay, what is the market trading? Is the market trading inside the range? So from here to here, it's trading inside the range. So it's not really... I call it right now the no man's land. It's not really, nobody's really interested between here and here. Everybody's interested above here or below here. When things start breaking, or even better if it breaks above this level in the S&P, so the high of 4,583, yeah? But the guy next to you is telling, oh, war and this and that, but the market, again, in the overnight session is still trading within the range. And you say to yourself, again, I'm going to start selling and see what happens. I think that's the most definitely the most sure trade. And you start selling and the market starts bidding aggressively, and you start going into the, I call it the twilight zone, or the dark side, and say, no, this cannot be. And how? And we're having a war, and people are getting killed, and the market's going down, and the market starts going up, and it goes up more aggressively, and it goes up more aggressively because everybody's thinking the same thing. Everybody's thinking it's going to go down, and everybody's averaging on their shorts, and at some point, actually, everybody throws up, and the market goes up aggressively, and that's about it. And you might have destroyed your month, your week, maybe even your year, maybe even you went broke because your mind went stalled. And you say, this cannot be, this cannot be, this cannot be. Of course it can be. Of course it can be. That is why every time you come into your desk and you open your screens and you look at the charts, just look at the market showing you. Okay, maybe the market in the overnight session has broken and closed below, but look what happened in the daily. Look what happened in the daily. I mean, it was like World War III, and the market broke the significant level in the S&P. And look at what happened at the end of the day, one of the biggest pullbacks in history. So you want to go short? Okay, maybe you went short in the overnight session and you were lucky enough with no volume and everything. But when volume started, okay, it doesn't really show in the daily candle, but I do remember this day. When the cash market opened, the market only went up. So what? So what was? So what kind of panic? What kind of opinions? How does that help? So that is why I always keep on saying, trade what's in front of you. Do not have an opinion. Do not form an opinion. Wait, and the market will show you the entry, and the market obviously will show you the exit. Do not form an opinion. Trade technically, trade what's in front of you. Look at the prices. And don't just look at the prices. I mean, don't just look at the ladder. Look at the prices in the chart. Look at what is printing, what has been printed in front of you. This is what matters, not what you think. Otherwise, you are trading with your ego. Another part that I discussed on the psychological part 2 weeks ago. If you're trading with your ego, then that's it. You are done. You're going to get obliterated very quickly. Trade what's in front of you. Trade what is given in front of you. If it's time to trade, trade. If there is no time to trade, if the volume is low, if there is nothing coming, don't trade. As simple as that. Forming an opinion, what does that help you? The market makers know that they're going to make big money if everybody wants to go short and they push the market up and the market eventually goes up. Or for whatever reason goes up. From the options guys, from who knows and who cares. If you catch a good trade, you are kind of, that's it, you are relieved. You don't have to have an opinion. Just try to trade technically, try to see what's in front of you, and trade that. Nothing else. Right, so again, I'm going to do another recap. Do read the news. Do read if something is very important. Let's say if inflation in the US or in Europe is like 8% suddenly, I'm not saying the market is going to go down. It's just have it in the back of your mind. See how the market operates when it opens. See how it trades, and then place a trade. Don't place a trade because you think the market is going to go down or because of higher inflation or because the bonds are doing that. Maybe, so what has happened to me many times, I do form an opinion. Okay, let's say we have high inflation, we're having corn, and say, okay, this thing has to go down, yeah? And the market goes up 150 points up on the first minutes of the cash session. I'm going short and I'm saying this cannot be, this cannot be, this cannot be. I'm getting stopped. P&L wise, I'm getting stopped, and at 8 o'clock at night it goes down 300 points. So, what matters in trading is doing the right thing at the right time. These two are equally important. I've been saying this a million years. The right thing at the right time. That is why you should not have an opinion. Maybe the right time is at 10 o'clock at night or 2 o'clock at night, and you're obviously sleeping. Did the market go up during the cash session? Yes, it did. Does it matter what you thought? No, it didn't. The market will do what the market has to do. That's it. Thank you very much. I'm gonna next time I'm gonna start talking a little bit about my style of trading and my kind of technical view of the markets. Thank you very much.